Hey everyone, welcome back to our channel. So you own a rental property in Canada? That's fantastic. That comes with taxes, right? But don't worry, it's not all bad news. But guess what? Declaring your rental income can actually save you money. Yes, you heard that right. By understanding the tax system, your rental can make you money and give you tax breaks. Don't miss out on these opportunities. Many people think taxes are just a burden, but they can actually be a tool for financial growth. Lots of homeowners don't know about the deductions you can get. It's like leaving money on the table. Declaring your rental income opens up a whole world of tax deductions, which can make your overall taxes lower. Imagine paying less tax and keeping more of your hard-earned money. These deductions can really make a difference, putting more money back in your wallet. So take advantage of the tax benefits and make your rental property work for you. When you declare your rental income, you open the door to a variety of tax deductions that can significantly reduce your taxable income. You can deduct expenses directly related to your property, which can add up to substantial savings over time. Think things like mortgage interest, which is often one of the largest expenses for property owners. Property taxes, insurance premiums, repairs, and even utilities like electricity and water can be deducted. By meticulously keeping track of these expenses and claiming them on your tax return, you can lower your taxable rental income. A lower taxable income means you'll owe less in taxes, and in some cases, you might even get a refund. The Canada Revenue Agency, CRA, provides a comprehensive list of all the deductions you can take advantage of. It's always a good idea to consult with a tax expert to ensure you're maximizing your deductions and getting the most out of your tax return. Here's a cool trick. Try to keep your rental income a little bit lower than your total expenses. This way, you can take advantage of tax deductions and reduce your taxable income. If you manage your expenses and set your rent carefully, you can make your taxable rental income really low or even zero. This involves keeping track of all your expenses, like maintenance, repairs, and mortgage interest. This might not make you a ton of money from rent, but it lets you use those tax deductions without paying a lot of taxes. Over time, as your mortgage interest decreases, you can adjust your strategy to maximize your benefits. This is especially helpful when you first buy a rental property because your mortgage interest is usually higher then. By planning ahead, you can make the most out of your investment and ensure long-term financial stability. Let's see how this works in real life. Imagine your monthly rent is $2,000. Your expenses, mortgage interest, property taxes, insurance, and repairs, add up to $2,100 a month. See how your expenses are higher than your rent? That $100 difference is a rental loss. You can use this loss to lower your other income on your taxes. This makes your overall taxable income smaller, which could mean less taxes or a bigger refund. Declaring your rental income is easier than you think. First, get all your paperwork together: rental agreements, receipts for expenses, and mortgage statements. Then, fill out the T-776 form. That's the Statement of Property Income. Attach all your documents and send it to the CRA before the tax deadline. You can file online or by mail. The CRA website has instructions and helpful resources. Before you rent out your place, check your local rules about rental properties. Some cities have specific requirements. Make sure you follow all the rules to avoid problems. If you're renting out part of your own home, you might be able to use the principal residence exemption. This can lower or even get rid of capital gains tax when you sell your home. There are specific rules for this, so talk to a tax expert to see if it applies to you. Managing your rental's finances is super important for making the most money. Keep really good records of all your income and expenses. You could use accounting software or hire someone to help. By understanding taxes, managing expenses, and knowing the rules, you can make owning a rental property in Canada a real financial win. Remember, knowing your stuff is key when it comes to real estate and taxes. Like, comment, and share. Follow us for more tax tips.